Joining us, Mr. Bhavik Mehta from Century Financial. Welcome, sir, and thank you for joining us. We have, of course, the closing of the Emirate markets in Dubai over 6,200 and support from real estate equities. To what extent do you believe that we are going to close tomorrow over exceeding the 6,200? Your answer.
Right. So it's currently earnings season in full flavor. We've already had announcement from all the major banks in UAE. Now markets are a lot more optimistic this time as far as the real estate sector earnings are concerned. So we have Emma Group earnings that are going to be released next month around I think 8th or 10th of August. So there's a lot of hope, optimism as to what the new launch of new sales project will be, whether the group is actually going to announce a new dividend hike. So looking at the overall optimism and all that, gains of something in the range of 0.3 to 0.5% cannot be ruled out for tomorrow's session.
Mr. Bhavik, to what extent do you believe that the Emirati markets were over-optimistic after the US and Japan have signed a trade deal that will be actually facilitating maybe a new deal with the EU, which means that the markets today are breathing when it comes to the pricing of the commodities and the pricing of the cost that was a bit frightening for the markets?
Right. So if you look at the last 2 or 3 day rally in the UAE markets, DFM as well as Abu Dhabi, it is not just the trade deal optimism that is fueling the markets. The earnings from all the major banks have been very positive. So markets have had this hope, this confidence that the overall banking sector liquidity still remains strong. The recoveries from the real estate sector are holding up for the bank. So I would say not so much optimism related to the trade deal, but more to do with the recent earnings that have been announced by the local banks.
So let's now go to the banking sector and the announcement of its quarterly earnings. What was the reaction of the market in Dubai or Abu Dhabi?
So for this entire year, we are seeing a big divergence between the performance of Abu Dhabi banks and Dubai banks. Dubai banks, the overall stock price performance seems to be lagging the Abu Dhabi banks because the results that we have had for the H1 from both the Abu Dhabi banks like FAB, Adib and ADCB, they have been more stellar as compared to the Dubai names. So just to give you an example, FAB almost showed like a 50% increase in its non-funded income. This is basically the fee and the commission income. Compare that with Emirates NBD, which showed a modest growth rate of something like 15 to 20% on this particular side. So what the investor is really looking for is, leaving aside the net interest income scenario, how much growth can be attributed from the non-funded segment. So in this regards, it seems that Abu Dhabi markets, the Abu Dhabi banks are playing a major role in this regards.
Thank you very much,
Thank you.
Mr. Bhavik Mehta, for your time and for your analysis. Thank you very much, sir. Shukran.
Thank you.